After a loss, I don't only review the trade, I review the next 30 minutes because the first loss is usually not what destroys your account. The real damage is the trade you take after it, the one you call a valid setup because admitting revenge sounds stupid. A few weeks ago, I showed you a trade. A runner, a 1 point stop took off me. I told you I would take it again and I meant it. That video was about the math. This one is about what happened after the stop, the part I didn't show. I want to show you the exact state I was in, the sentence my brain used to justify getting back in, and the journal check you can run after a loss to see whether the next trade was a process or revenge. If you have ever taken a loss, open the next trade too quickly and told yourself it was different this time, stay for this. If you saw the last video, you know this trade. 30 seconds recap. 7 May, I was looking for longs on GC and silver. By the time the real setup came, I was already 2 losses and 1 break-even down on the day. I took it anyway because it was by the plan. The market stopped me by 1 point, then ripped in my exact direction without me. That's the whole trade. I broke down the chart, the entry, and the math in the other video. Watch that one if you want the mechanics. This video starts after the stop got hit because if I only review the entry, I missed the part that actually matters. The setup was not the danger. The next click was. Now, picture where I was actually. 2 losses, 1 break even. Then a clean trade stopped by 1 point. Running away, I called it without me. Down on the day, I was in the chart, right about the direction. I get paid nothing for it. That is the exact state where bad trades start looking reasonable, not stupid. Reasonable. Your brain does not say go revenge trade and blow the account. It says something cleaner. You were right about direction. Get back in. It's only a red day. 1 good trade and the day is fine. This is not revenge. This is the next valid setup. Now, the last one is a dangerous one because it sounds like part of the plan, but it can be the same urge with better words. Here's the reframe that actually holds for me. The market is not out to get you. It doesn't know your stop is there. It doesn't know you exist. The purpose of opening a trade is to close it. One of 3 ways. A profit, a break even, or a -1. This was simply a -1. Complete, normal, expected. Not a betrayal, just an outcome. But knowing that sentence and feeling it when you are down on the day are 2 very different things. That gap is where the rule has to live. I did not get back in, not because I suddenly became calm, not because I'm more disciplined than you. I didn't get back in because the decision was already made before the trade happened. In a journal, not in that chair. I had looked at enough of my own trades to know what a red day is. It is noise. You don't judge anything on the last 10 trades. You look in a set of hundreds. My last 17 trades at that point were roughly break even. Break even is fine because the one thing trading guarantees is drawdown. So the rule was simple. After a clean loss, I do not ask, how do I make it back? I ask, if I take the next trade, is it in my plan? Or is it trying to repair how I feel? That sounds soft. It is not. You can measure it. Open your journal, find every losing trade, then check the next 30 minutes. Did you take another trade? Was it a plan set up before the loss happened? Was the size the same? Was the stop the same? Did the entry meet the same rule? If the answer changes after a loss, you found the leak. That is your revenge trade tax, not the first loss, the damage after the loss. That is why I say you cannot out-discipline a missing data set. With no data, a loss feels personal. With the data, it is recorded -1, and you close the chart. Let me make this practical. As an example, if I take a trade at 3 p.m. and it loses, the review is not finished at 3:05 p.m. I need to know what happened after. Did I wait for the next candle that was already part of the plan? Or did I start zooming into the lower time frame to find something that made me feel better? Did I keep the same risk? Or did I size up because I wanted the day back? Did I write the setup before I entered? Or Did I only explain it after the trade was already opened? That is the difference. Revenge trading is not always obvious. It does not always look like smashing the buy button in anger. Sometimes it looks like analysis. Sometimes it looks like patience. Sometimes it looks like a clean entry because your brain is very good at building a story after it already wants something. So the journal check removes the story. It asks a boring question. What did you do in the next 30 minutes? Traders talk a lot about entry discipline. Wait for your setup, size it right, don't click too early. Of course, that matters, but entry discipline is a part everyone can see. The expensive part is what happens after a clean loss. No one sees you sitting there after a stop. No one sees the mouse hovering. No one sees the argument in your head getting more convincing every second. And because nothing happens on camera, people think nothing happened. But that is usually where the account is saved. The trade in the last video had good entry discipline and still lost. That is trading. The money was not made by finding a better entry after it. The money was protected by not turning a normal -1 into something worse. This is why I don't like generic advice like just be disciplined. Now, discipline how? Show me the rule. Show me the journal. Show me what do you do in the next 30 minutes after a loss. If you cannot answer that, you don't have a discipline problem yet. You have a missing process. So here's the work. Open your last 30 trades. Find every losing trade that had another trade within 30 minutes after it. Then total what those follow-up trades did to your P&L. That number is your revenge trade tax. For you, that number might explain why the system looks profitable in backtests but feels unprofitable live. You don't fix that with another entry model. You fixed it by putting the post-loss moment into the journal. If you don't have a log yet, mine is free, link in description below. Next video, I'll be going through my real Q2 2026 P&L, the whole quarter, not just the highlighted reel.